This is Alan Bush with ADMIS with the Financial Futures Forecast for Tuesday, March 31st. Starting out with the stock index futures, we are seeing prices lower this morning. In fact, it looks like all of the financial markets are responding to what appears to be geopolitical risks that are expanding. We have the ongoing nuclear talks in Iran. Also, we do have the problems with Greece concerning their funding. Some talk that they could run out of funds soon. So those two geopolitical events seem to be dominating all of the financial markets, not just stock index futures, which are under some pressure now. However, I'm inclined to think that we will see a recovery, possibly a move back to higher on the day. Don't forget, we have a lot of accommodation in the banking system. Just yesterday, the People's Bank of China indicated that they are thinking about adding more stimulus to their economy. So look for recovery in the indices. Longer term, the bull market still appears to be intact. Over in the foreign currencies now, flight to quality helping the dollar and also supporting the Japanese yen. Those are considered to be flight to quality currencies. So in light of the geopolitical tensions now or events that are ongoing, the flight to quality currencies are moving as you would expect them to. We also have the euro currency lower, even though we did have better than expected economic numbers in the Eurozone concerning inflation numbers, showing less of a negative number in inflation, and employment in Germany now falling to a record low. So it's the geopolitical risks that appear to be dominating currencies as well. Also, the Australian dollar under some pressure on ideas that the upcoming Reserve Bank of Australia meeting could produce a rate cut to a record low 2%. And in the interest rate markets, Treasuries trading higher. Once again, it's the geopolitical influence that is dominating today. Also, there is a growing feeling that there is going to be less and less of a chance of the Fed raising interest rates at the October meeting, even though we did have lacquer of the Fed this morning saying that it's possible that the Fed could raise in June. All of the markets did not respond to those comments. The stock index futures were lower, did not fall any further. Treasuries remained firm. So there is a feeling that the Fed will be raising rates later rather than sooner. At least that's my perception as well. So the bull market in Treasury still appears to be intact, especially at the long end for the 10 and 30-year issues. So good trading, everybody. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.